Okay, guys. So first, I'm going to the decision tab, which is the decision where you guys are going to fulfill the boxes that you need to change, okay? So look, guys, you have product A and product B and corporate, okay? So this means that the same decision that you are going to take for A, you are going to take for B, plus some few decisions that are more at the corporate level. For example, the decision related with the debt. Yes, like the debt is not to take the debt for product A or for product B. The debt is to take the debt for the whole company. Okay. So let's begin with product A, which is going to be the same for product B. You guys have this first column. The first column is related with the current results. Yes? This is the new administration. You guys are the new managers. So you are going to take the company with this situation. This situation is going to be the same for all the companies. Yes, because you are going to begin in equal conditions. But this is going to change after this first round. Okay? And next is the forecast that you are doing. Yes, you are the new administration and you are taking decisions for this new period. Okay. And here the simulator is going to calculate like the changes in percentage between the actual situation with the forecast that you are doing. Okay. You guys now find that you have boxes in your color. Those are the decision boxes. Okay. And you have like white, those white are assumption boxes. Yes. Assumptions usually are not so important. This is the most important for assumption. Yes. Because this is how much you expect that you are going to sell. If you leave in that with 0, yes, like you are saying to the simulator, I expect that I am not going to sell any unit of A. Yes, so the simulation is going to calculate a 0 income from A. And this is going to put you like in a negative forecast. Yes, so this is like the only important assumption for each one of the products. No? For example, look guys that I am going to put here like one huge number. Yes, I'm going to put here 1000 and I click enter and the simulation put me this maximum number of 56. So what does this mean? This means that in the previous round I sold 51 units of product A and now I can sell 56 maximum. Why I can sell maximum 56 of A? Because look my maximum usable capacity. Yes, I don't have more I don't have inventories or probably I have just a little bit of inventory, but I have a selling. I cannot produce more. Okay, if I want to produce more for the next round, I should take decisions about facility investment. Okay, so here production volume. Yes, the simulation is putting me the maximum amount that I can produce. But if your decision is to produce a little bit less, you can put here a lower number. Okay, you cannot put more because you don't have more capacity. Payment terms of suppliers. As I said, you guys are paying your supplier of raw material of A, you are paying immediately. Once he delivers the raw material, you pay immediately. You guys can, if you want to improve your cash flow, you can increase here the payment terms. You can pay him later. Yes. The trade-off is if you are going to pay him later, yes, he is going to charge you an extra cost. Remember, if you are going to pay 30 days later, you can calculate the extra cost 30 days divide by that magic number of 600, and this is going to be 5%. Yes, if you increase the payment terms in 30 days, your raw materials are going to be 5% higher, the cost, okay? Now, you guys have here something that says value proposition. Yes? Remember that when you are doing marketing, if you want to be attractive to your customer, it is like a package. No, it is not a single factor, it is a package. Okay? Here the package is price, customer payment terms, administrative and selling expenses, and research and development expenses. Okay? And this is connected with this slide. Price, administrative and selling, research, and payment terms. Yes, so the value proposition is here. Okay? So you guys are charging a price of $40 for the product A. Yes? So you are going to take the decision. Should I increase the price a little bit? Should I leave the price the same? Should I decrease the price? Okay, up to you. This customer, you guys are giving him 60 days of credit. You deliver the product A, and he is going to pay you 60 days later. Okay? Are you going to increase the payment terms? Are you going to leave it in 60, or are you going to decrease the payment terms? Up to you guys. Okay? Administrative and selling expenses. In the previous round, you have invested $660, yes, of administrative and selling expenses. Are you guys going to invest the same budget, less budget, more budget? Up to you. And research and development expenses, yes, you invested $150. What is going to be your decision for the next round? Okay. Look, now you have one title that says investment in facilities. Facility investment, in the previous round, you invested $202. Yes? Remember that for every $25 that you are going to invest on facility investment, you can increase the size of your company in 4 units. Okay? No, 25 per 1 unit. So if you are investing 202, this is more or less that you are increasing in 8 units the size of your factory for product A. Okay?
How about for facility investment is only for product, not the whole thing?
No, it's for the facility for product A, and here in product B you are going to have the same information, and this one is for B is more expensive, no? Okay.
It's 100.
Exactly. Okay. So this is the information for product A. Here you have like assumption boxes that are not so important, but you can understand what do they mean. Total market size. You sold in the previous round $360 of units of product A. 360. What do you think that you are going? I don't know. Excuse me. This is not you. This is the whole market. All the 6 companies from the whole industry together, they sold 360 units. What do you think that the market? what is going to happen with the market for the next round?
Increase.
Yes, remember that assumption that you guys with A are more or less here, and this means that like yearly, kind of 10%, but I said that is going to depend, no? If you guys are pushing resources on A or B, yes, this is going to depend of your decision. It's not 100% sure that it's going to be that way. So you guys here, if we are like accepting this assumption of the presentation, we are going to say this is going to be like that. Yes, and like that, I'm growing 10% the market, no? Kind of a market share. The 100% of market share of product A was divided in equal pieces. 100 divided by 6 companies are giving each company 16.7%. So here you can try to handle, okay, my strategy is going to be, I want to become one of the leaders company of A. So my strategy should be trying to increase this market share. Probably some of the groups are going to try to be focused on B, or some groups are going to have to make the push in A and B at the same time. Okay, so this is going to be one strategy that you guys are going probably to be defining soon with your company colleagues. Okay. Okay, this is the information that you guys need to fulfill. You have a lot of information and a lot of reports. Yes. So it is important not only to be concentrated in the boxes of your color, but try to understand all the information that you have, how the information is connected. Yes. And ask me questions. I will try to solve all the questions. Okay. Like be proactive and be curious about all the reports that you can have here. For me, it's going to be the same, so I'm going to move directly to corporate. Okay. In corporate, we have here the income statement. Yes, the results, the actual results of period 4. For example, the sales revenue of both products was $4,990. Yes, this is like the 100%. And if you have cost of sales of 2,162, this means that the cost of sales represent 43% of the sales revenue. Okay. This is the forecast when you are moving prices and quantity to produce and administrative and selling expenses, you are changing this forecast. Okay. There's only one decision that you are going to take with the income statement for corporate, which is human resource and quality decision. Okay. This means that you guys invested $100 in the previous round of human resource and quality decision, which $100 is the 2% of the sales revenue. Okay. What you guys are going to invest in this new round? Are you guys going to invest the same $100? Are you guys going to increase that amount of money? Are you going to decrease that budget? Okay, decision up to you. And for the cash flow, you are going to have more decisions. Yes. The dividend decision, for this moment, you cannot pay dividends to your stockholders. Yes, if you guys want to put here $1 of dividend, you enter and it go back to 0. This is because your company has accumulated retained earnings negative. Yes, remember that the meaning of the dividend is to share with your investors the profit of the company. At this point, the company do not have profits, so you cannot share like profits with the investors, okay? But you can take decisions here for example, short-term loan in the previous round, the administration took one short-term loan of $450. The simulation is putting the same information as before. Yes, but you can decide, no, this time I don't want to take one short-term loan because it's expensive. Remember that the short-term loan pays interest of 12%. So probably you guys think, no, I do not want to do it. Yes, so you put 0. So you are going to have a 100% reduction. Yes, because you are not going to take the short term in this round. But with long term, you can have two decisions. For example, in the previous round, the administrations got a new debt with the banks of $700. This decision, this time you can ask for more long-term loan, or this time you can repay. Yes, repay means that if you put money here, you are trying to decrease that long-term loan that, remember, in one slide says that you have like $4,250 in long-term debt. Okay, so you can or ask for more in or repay. Try to reduce the debt. And this is the graph or the ratio that I told you guys. Debt to equity ratio. This is the equity of the company. This is the long-term debt, and this is the short-term debt, and this is the debt to equity ratio. Yes. So you guys are taking the organization with a 68% debt to equity ratio. Yes. So you guys pay 6% of interest per period. Remember that, for example, with the information that is now in the simulation, the debt to equity ratio, it is growing at an 85%. Yes, and at that point you are above 80. When you are above 80, you are going to pay an 8% rate of interest. Okay, so those are the decisions that you guys are going to try to take. Okay, so now you guys with the game, the rules that you have plus this, like first look into the simulation, you guys are going to begin to take the decision, and I will be like answering the questions that you guys are going to have. Okay.